Glory Day pre-market phase today is about structure, not prediction. Mark SPX and XPS high lows block and liquidity.
All right, looks like we are live. Oh, glory, glory, glory. Thank you, God, for another day and another opportunity to advance the kingdom. All right, just want to again put God ahead of everything that I'm doing and just give God thanks for our daily bread as we lean into God for knowledge, understanding, insight, and wisdom as we position ourselves to receive a sweet blessing. Luke 16:10, as you know, this is the scripture I'm writing on my heart. Whoever can be trusted with very little can be trusted with much. And whoever is dishonest with very little will also be dishonest with much. And that, to me, is what I apply to the discipline of trading, particularly as it relates to greed. Yeah, that little devil. However, got some strategies that I've been discussing that does help. Placing that limit stop order, and that takes care of that. I'm setting it at 30%, and that is my risk management strategy. That is how we avoid losses, and that's how we become highly profitable traders, and that's how we scale accounts up. I resolved to set my stop limit order at 30%, and that is that. So with that being said, I'm going to go ahead and put on a little two cellos music, and then I'm going to get right into hopefully the lesson. We're going to spend about 5-10 minutes on the lesson today because the strategy that I am applying today is a scalp strategy. That means I'm taking scalps. That means I'm gonna enter the trade and exit it pretty quick. It should hit my 30% pretty fast. Actually, I'm even gonna do better than that. I'm gonna set it at 25%. Just to make sure I'm increasing my odds of probabilities and profits. So give me just a second, and I will do my best to show you what I am referring to when I say scalp strategy and how it works. How it works. This is relatively new to some of us. So I got my rhythm going. Okay, so try to do this quick because strike prices is actually the next thing on our syllabus. We've covered quite a bit, which we will be circling around and revisiting once we get through it all. But we've gotten through all of market structure, which I am, ecstatic about because that is, what makes all the difference is just understanding the structure of the markets that we're buying and selling assets on. Let me read the disclaimer real quick. I'm sharing this information for informational purposes only. It is my own proprietary system as a result of my own research. It's a strategy that I use in my own real account. While it's a principle-based strategy, the strategy is subject to change. By sharing my trading activities, it's not a solicitation from me to buy or sell securities for others. Trading involves risk with possible loss of principal. Sharing my live trading sessions should not be construed as investment advice. Okay, so as I was saying, I've been able to get through quite a bit of the market structure, and on my list of things to cover next is the strike prices, and I'm gonna go over that right now and try to get through it in about let's give it 15 minutes real quick. Okay, so the scalp and the strategy involved with that. So we can see this is the ES futures. It's open right now, and looks like we're getting some bearish activity up here. I'm kind of reformatting my studies. So the studies are the lines and the graphs at the bottom. Okay, so what you're looking at is the red, white, and blue, right? So the white is now the VWAP line, but the blue is the 9-day EMA, and the red is the 20-day EMA. And so those are, I'm not going to get too technical into that because that's not the point of today's lesson. However, I will say when my blue line is above my red line, we are in a bullish bias. And when the red's above the blue, we're in a bear bias. And when they're angled up like this, we are, well, that looks like a trend. So it's a bullish trend. I'm seeing bull flags. Won't get into that either. However, we don't need to know all of that. But basically, we just look at the direction that the blue and red lines are pointing in. They're pointing up. The VWAP's pointing up. Everything's pointing up. Okay. So we'll get into the studies hopefully tomorrow. Barry had one that I like. I am trying to get the TTM squeeze on my charts. I think I did find it, but it doesn't go on the mobile version. It comes. I can get it on my TradeStation laptop. However, I haven't updated my to Windows 11, and I can't stream from my laptop, so I need a new laptop. I just bought my iPad and realized this has some limitations. So anyway, getting back to the strike prices, we are going to go to trade. All right. So as you can see, price is 67.45. All right. Price is 67.45. And we are above the VWAP line. I got my 9 EMA pointing up, the 20 EMA pointing up. Those are the average prices from the last 9 days and the last 20 days, and prices above both of them. So you're going to see the angle go up. That's the quick version of the 9 and the 20 EMA. All right, so we're going to go trade, okay? Oops, we're not going that way. Hold on. Hold on, I blew it. What we're actually going to do is I want the options chain, so that's what I'm dilly-dallying around trying to find. Uh-oh. Oh, I'm totally blowing it. I'm not being smooth, guys. Uh-oh. Let's get rid of that. Let's start over. Okay, that always works, right? Okay, boom. Let's change my orientation here to, oh boy. Okay, I had an idea. Just want to take it to the options chain. Jeez. Oh, I know. All right, so I get it. I'm like being kind of slow right now. This is a futures, so the options chain is going to look different. It would be better to take you to the actual SPXW options chain, and I am okay. So we now have options. Okay, so for this example, we're going to pretend that XPXW is trading right now. We can still view the options chain. So the current price, if you look up in the upper left, is 66.32. What we're going to do is we're going to open up the options chain. You can do this on Thinkorswim with your paper money. You have an options chain. You can open it up and you'll see your calls, puts, you'll see the strike prices, you'll see the delta. Well, you may not. You have to actually set it up. So you go to the little gearbox over here and you open it up and you can choose, your settings over there, grid settings. All right, so you go to the right, there's a gearbox underneath April 2nd. On my screen, what you're looking at is subject to be different. So you'll need to just examine it and you'll see the gearbox and you can set it up to display bid, ask, delta, and options. Okay. I am going to, let's go ahead and talk about the delta. The delta is it determines quite a few things. I'm going to give you the quick version. You can do a deeper dive, but if you look at the 50 delta, it's got 50-50 chance of going against or for you, going for you or against you. Okay. Same thing with the puts. You look at the 49% delta, it's got 50-50 chance, right, of going against you or for you. So that is the probabilities of the deltas. When I first started trading, I didn't know anything about too much. I didn't know anything about the studies, the VWAP, the 9 AMA, the 20 EMA. TTM squeeze was the first study that Barry had shared with me. I looked at that, and at that point in time, I was so fresh, I didn't even know how to even take that. It looked complicated. So I understand I'm trying to understand now as I rewind and look back, how much I've learned over the years, and just, okay, this was a foreign language and everything did look weird. But I'm here with you, I'm explaining it, and I will explain it time and time again. I think that's what good coaches do is they teach and they share, and they just do drills, and they do the same drills, and then they think of new drills, and they just keep expounding and trying to make their systems and their programs more comprehensible, more executable. All right, so that's what we're doing here, but we always circle back. All right, so that was a quick breakdown of the delta. Plus, it reveals how much premium and credit you're going to receive on a trade. All right. Plus, you have the open interest there. All right. So we can determine how many people are interested in a contract based on that open interest number, and that's usually where price is going to gravitate, right? We've kind of covered that last week. But we're talking about strike prices right now. And I wanted to share today's play. All right, so if price is 66.32, I'm looking. I'm after I do my analysis after we see the opening of we get the opening bell and we see the direction and we determine the bias. What I am going to do is I am going to place a strike at the money, maybe slightly in the money, depends. But I'm going to go at the money on the broken wing side. So what that sounds like is I'm going to place a call credit spread, which means that I believe, based on the probabilities, that price will not go past this point based on my thesis. So that's what we do with the Smart Money Roadmap is we're creating a thesis. And my thesis is going to support the top side with a call credit spread and the bottom side with a put credit spread. So with the put credit spread, I am saying that price will not go below this price. Got me? And you can apply a strategy on Thinkorswim. You just pick a call or a put. The call is saying the price is going to go up. The put is saying the price is going to go down. We're going to keep it real simple. All right. So you need to, do that. That's not too hard. Just picking a call or a put and just seeing what it does, the paper money side of things. Okay, so this is, I'm teaching you an at the money or in the money trade. All right. So what I'm saying about my trade, and as an example, is if it's 66.32, and I believe from here, based on my thesis, which I have not formulated yet, okay, I'm just making it clear that this is for instructional purposes. I am going to take my so price is 66.32. I believe it's going to an upward liquidity target. I'm going to place my puts at 32. I could place them at 35. I'm going to show you an in the money condor. So that would be there. That would be there. Okay, so I have a 66.35 put. I've got a 66.30 put for insurance. Okay, and so this is showing me that I've gotten $233.40 in credit already for being in the money, right? So those are the deltas, 50 and 49, and the credit is 233.40. Okay, so now I am going to, with this example, we don't get very many strikes. Okay, however, what I'm saying is we don't get all the strike prices, we get limited. So I wouldn't place the trade using my iPad. I would use my laptop because I have a higher selection for the strike prices. But based on my thesis, I would be saying that the price target, the smart money price target, would be up around 66.80, and price will move away from my lower strike and towards my upper strike. So I'm just, for all intents and purposes, I'm going to do a call credit spread. Remember, the condor is a combination of two strategies. You got the put credit spread and the call credit spread. Okay. It just I know we need to cover that, but I'm giving you an illustration of what it is right now. So try not to be confused because I'm telling you exactly what it is. Right? There's nothing else to figure. Well, okay, there is. I'm simplifying it. But this is what it is. I'm about to illustrate a call credit spread. Okay, so a call credit spread is I am going to sell the 66.75 and I'm going to buy the 66.80. So I just sold a contract for 66.75 and I bought one for 66.80. That's how I made a profit. Okay, so now my credit is $411.80. Okay, so what an in the money condor looks like is this. So let's go over here. Okay, so what we have here is an iron condor, 415 limit, buy to open, boop, boop, boop. So I am buying to open a 66.30 put. I'm selling to open a 66.35 put. So I've got like a premium, a credit there. And now that is my put credit spread in the money, expecting price to go to the upper liquidity targets. I'm selling to open a 66.75 call. I'm buying to open a 66.80 call. So my max loss, get this, was $85. My max profit is $415. So let's go through that again. Right underneath the breakdown of the play, the calls and puts that I'm buying and selling, it says max profit over to the left is 415. Break even is 66.30. Break even to 66.79. I'm not holding this to break even. I'm holding this for what? 25% today, right? Because I am in the money. It happens fast. It happens quick. I'm in and out of the trade. So max loss, $85. Okay, so that's what it looks like when we do an in the money condor. It's usually 3-to-1 on the profits. In this case, it's greater than 4-to-1 return. All right, there we go. That is typically good for the first play of the day. We're looking for an A+ setup. So I can show you how quick and fast that'll profit. But the thing is you have to set your limit at 25%. That's really easy to do, right? Because you just, take what you receive and multiply it by 70 and you buy it back at 70%. And you keep the 30% that you sold it at, because we are sellers. I keep saying that, but we really are. Okay. All right. So that's that. We'll be covering that most likely in the Saturday workshop, amongst a few other topics associated with strike pricing. So today is strike pricing, right? Okay. So, with that being said, matter of fact, I should make the whole week strike price. Not repeating the same thing over and over, but just different points and just different concepts. Just elaborating and going deep into the strike price. So that's what you can expect from me today. This week is just going deep into strike pricing, but that's the basics of a strike price right there. I also wanted to take a look at this morning. I had some thoughts. Oh, wait. I had some thoughts about showing you this. Hey. Oh, there it is. Chart. See if we get any. Oh, nope, no action. Huh. Okay. Well, if you take a look at your screen, I mean, we don't get. Do we get good candles on this? They're always so dinky when it's not open. And then it takes me forever to like figure out how to get them to be the right size. See how they keep disappearing on me? Oh, okay, we're getting better. Okay, this is getting better. I want to show you this. Maybe a month. This is not trading right now, but I wanted to show you this. This is the XPS 6632 $663.22. All right. If you take a look at the SPX sitting up top, it's $6,632.22. This is the same. All three of these are the same. The only one that I don't have up there right now is the SPY. All right. They're all the same. They are the S&P 500. I'm missing one of the family members. Let's go ahead and put the SPY up there so you get an idea of what's going on here. SPY, S&P 500. Is that it? I do believe that is it at the top of the list. We'll see. We added it. Yes, SPY. Oh, it's closed. Okay. So it's not trading right now either. But I want you to take a look at it. 662, 663, 6632. So the SPX, the SSP trades with the SPX tick for tick 1/10 less. So it's 1/10 smaller. So in other words, we can trade the XSP for 1/10 the size and price of the SPX. So in other words, this is the mini version of it, and it's where I would start in terms of scaling up my account. So that's why I'm showing it to you. It's why? Because the options are cheaper. They don't cost as much because they aren't. Let's leave it at that. They don't cost as much. And I'm trying to show you that, but we got no data right now. Trade. Oh, there we go. We got some. Oh, but that's back to SPX. That's SPX. Stop it. XSP. Get it together, brother. There we go. Okay, so that, still blank. All right, oh, there we go. Okay, so got the options chain up. You can take a look. They're 1/10 the cost and price of SPX. You can do some comparing. That's not the point of today's lesson, but we will be taking a look at XSP as more of us are getting closer to placing actual trades. I would recommend taking a look at XSP. We can still learn the SPXW because it's the big brother, and tick for tick, they are the same. They tick the same. That's what I'm at a loss for words for saying. So anyway, with that being said, we're gonna start getting ready for the preparation of our smart money roadmap for today. I said we were going to simplify things today and take a picture of the previous day's action, which was Friday, and we will compare it to today's chart.
The American stock
Here we go.
market is down, with the S&P 500 down 0.6%. The Nasdaq Composite Index down 0.9%, and the Dow Jones Industrial Average down 0.3%. SPX and SPY update.
Okay, so that announcement was that the market is down today, but don't let that fool you. It's the market is based on supply and demand. So it can be down overall, but still go up if the supply and demand dictates that that's where the liquidity is, right? So we're not going to let that affect how we strategize. We will keep it in mind, but that's about all we're going to do with that. I'm looking at Wall Street Journal headlines right now. Stock futures rally as Brent pulls back from $105. So Brent crude oil futures price past 10 days. So stocks and futures rallied 37 minutes ago. That was the announcement, but we're still getting that the market is down. So just keep that in mind. I'm looking at headlines. It's all about oil, right? So that is, a contributing factor, I'll say, in the market's direction. But, that's it. I mean, in terms of major catalyst and macro news events, that's about all we got going. And that's really not. Well, let's take a look at ES futures, right? That tells us. So back to the ES. And what do we see? It's that's what we see. 67.47. So yeah, I mean, we see an uptrend. So anyway, that's about as far as we're going to go on that. I mentioned looking at barchart.com. We're going to make that a daily habit. Okay. So I'm going to do the best I can to take us to barchart.com. I may have it. Oh yeah, I think I have it up. Do I? No, it's not there. Okay, no big deal. We'll just go to Safari and we're gonna type in barchart.com. It's used to me being there. There it is, right there. Boom, barchart.com. Look at that. I'm getting better, guys. We get better. 1% better every day is what I always say. And that includes to this too. I'm getting better for us, for you, for me, for God, for country. All right. So we're going to take a look at the SPX. And there it is. All right. And we're going to scroll all the way down, right? And we're going to find... Sorry, I hope I'm not making you dizzy. It's doing the bounce thing. That means I went too fast. I hate doing a fast scroll and missing my target. Market movers, okay. Oh, there it is. Over to the right, we see key turning points. So I am going to write down my key turning points real quick. And I am going to use this as reference when and if I am curious about how far price can go in a direction. All right, what's today's date? Today is March 16th. We got the third, second, and first resistance. We got 68.11 at the top. That's the ceiling. That's the highest point of the ceiling. It's like a 3-story house, right? 3-story house. Top floor is 68.11. Second floor is 67.72. And then we got 52 cents. And then the first resistance point and the bottom floor is 67.02. Oh, 67.02. That's right. All right. So that is resistance. That's the top. So now we're going to go look at the basement. You know, we're going to look at the first, second, and third support levels. First support level is 65.92. So that's if price is going down, right? So that means this is below price already, right? So this is the first level is not the first point of support for price. It's the last level of support for price. Or is it? Oh, no, I take that back. Whoops. Hey, that's a misstatement. So let me correct myself. It is the first point of support. And then we go. So based on this and based on where price is currently, it could get down into the 65s, right? As low as 65. I'll illustrate my point. So it'll look like, oh my God, it's crashing. It's gone so far. Well, I want to show you this time. We'll go SPX because it's the one. Let's go watch list. Let's go over here. SPX. Okay, good. All right, there we go. Okay, so price is currently 66.32, and what bar chart is saying, we haven't generated our smart money roadmap yet, but what bar chart is saying is that the first level of support is 65.92. So you can see how low that can go, right? So Well, that could be way low. $65.92. Okay, that's not been on the chart in quite a while. Let's go to a month. Oh, okay, here we go. Let's open it up a little bit. Okay, there it is. So we are looking here. Oh, look at all that. So December. Just looking at how far we've come. So 6592. That would take us here. Well, actually, let's just do a little cleanup here. We're going to clean up some stuff. Okay, got rid of the joint. All right, so what we're saying here, based on bar chart, we're just going to keep this in mind. We'll generate a smart money roadmap based on the current market structure at open and the previous market structure from Friday. But we are saying 6592. I'm going to have to ballpark it. All right. So that would look like, let's go. Will it stay on a week? Oh, it did. Day? It's way down there on the daily. So what about if we went 5 minute? Nope. Disappeared. Just looking at where the first level of support would be based on barchart.com, and it would be down there. All right. So with that being said, we've got some data from barchart.com. We're going to be taking a screenshot of a 5 minute time frame on SPXX. Yes, I feel good about that. We're going to take a screenshot. We will take a screenshot of the ES because it could help reveal, no, there's no data we need from that to tell the truth. So that's the whole point of waiting until market open, is so we don't have to keep updating our smart money roadmap. We get a real-time roadmap for the most part, and we're going to compare it to the previous day's roadmap, and we should get all of our data points that way. So we're going to take, let's take a 15-minute break and come back, and then we'll let the market kind of settle down the first 5 minutes. And then at about 6:35, we'll take our screenshots, put our our cheat sheet in to our AI, and get that smart money roadmap generated. Other than that, enjoy a cup of coffee, tea, whatever you do. Have some water, lemon, cayenne pepper. I don't know. What are you doing? All right. All right, break.
No early traits. First quarter liquidity sweep lockout. Market open. No trades during volatility. Observe only. Q1 smart money psychology lets trick retail into buying so we can offload. Sweep confirmation. Volume confirms sweeps, breakouts, exhaustion. Sweep volume spikes 150 to 220% of the prior 20-bar average. Occurs at or through the previous day's high or previous day's low. Overnight high or overnight low.
All right.
Sweep completion continued.
What do we
Occurs
see
at
here?
high
We
or
see a
previous
gap
days.
up
Single impulse candle, no chop.
going
Immediate range
towards,
rejection or stall after the spike.
looks
Breaks
like
key
upper
levels on 8 to 8
liquidity.
points.
All right.
A fake sweep, 130% volume.
Bar chart. I'm just
Overlapping
looking at
candle.
the data we
Price
got from
holds
bar
above
chart
or
for
below
the
with no rejection.
resistance levels. We are prices 6693. So first resistance 6602. I mean 6702. Yeah. Let me get my verbiage together. 6702 is the first level of resistance. Let's see if price continues past there. Six, 702, 67. 72? 6811. Huh. Oh, what's way up there? Let's see where it goes. Let's check this level out. I just want to take a look at. See, come on, be responsible. Okay. There we go. What's here? That's the highest point of the range. Huh. Oh, I see. Right here as well. Oh, that's part of the 6702. Okay. We'll be generating the smart money roadmaps in just a minute. Just a minute. Yeah, we should be getting some pullback pretty soon. And waiting for the VWAP to be established. Right now it's just bent straight up. Everything's bending straight up. So this is not where we enter a trade or even we can get a read though. That's coming in a second. I'm just making a few chart adjustments on my laptop. My iPad's for instructional purposes only. Well, not only. I use it for data analysis and all that good stuff, but I also have a laptop that's got charts on it with all the different time frames. I'm looking at the 5, the 30, the 15, and the 1, even the 1. The 5 and the 1 is the most important though. But that's for the microscope, right? The 15 and the 30 is for the macro. Or the bigger structure, we'll just say. And I almost have it all set up and okay, got it. Okay, so let's ready to do our analysis. Okay, so let's go ahead. All right, good morning again. All right, good morning. Okay, so here we go. We got current 5-minute time frame. I'm gonna bring it in. Well, that's the previous day's 5 minutes. Let's bring it in a little tighter. Actually, oh, that's some good data right there. So with all that data, we just take a screenshot of that and we are gonna get everything we need. Previous day's action, current action. And so we're just gonna put that in Chat GPT and we're gonna put our smart money technical analysis cheat sheet in there. Okay. It's being generated, it's coming. And we can compare some notes. All right, I'm printing it off. I'm getting a PDF. I will post it in the thread so you can compare it and see what you got if you need to do that. I would think that you would get an accurate report right now.
First trade window open. Only expansion trades allowed. Displacement is required.
All right, that's what I got. That's not what you got, then just double check and make the corrections in your AI. Tell it made an error and to correct it with the current data. Okay, but with that being said, I'm moving on with my analysis. All right, okay. Again, we're waiting for the A+ setup. We got a developing range high of right where that gold bar is at the top. So we're filling in the structure, we're bringing it into balance. We've got the previous range high 67.33, developing range low 66.38. Range size 95 points. Okay, so looking at 95-point range. So that leaves about 45 points. About 45 points in either direction. Previous day's high 67.33. Okay, there's liquidity there. And then we've got previous day's low already identified at 66.38. The VWAP is going to reposition itself, but right now I'm showing it at 66.93. So it's already moved a couple points. VWAP base. We're going to look at that upper base of the VWAP. There's actually 3 bands to the VWAP, upper, middle, and lower. We're going to look at the upper base, being that price is going to end up above the VWAP. But again, we're waiting for a retest of the VWAP. So we want price to return to the VWAP, accept it or reject it. Acceptance would look like a touch of the VWAP, a 5-minute candle close above the VWAP, and another 5-minute close above the VWAP. And then we can accept acceptance of the VWAP. So price will be targeting the upper liquidity zones, clusters, and I'll be entering a trade again at the money or in the money, and let it go towards the liquidity zone and exit with 25% profit, seeing that the risk to reward ratio tends to be 3-to-1 my favor. So I'm going to try to catch that and execute and be ready for the next trade. All right, so to risk center. Again, we've got 6,700 at play underneath. That's that psychological round number. right, resistance levels 67.50, 67.33, prior day's high liquidity 67.33, which is probably the current target. Looking for a VWAP retest, and then we'll be able to determine whether or not price and smart money will be moving price towards the upper liquidity starting at 67.33 and can extend to 67.50, which is nice to know because I'll be entering my strike at or just below the VWAP line, again targeting an in the money 25% play execution, trade execution. Underneath we have 66.65, 66.40, 66.65. 66.40 through 66.65 is the demand zone. However, previous days low, which includes liquidity, is at 66.38. So we'll be mindful. Upside targets 67.33, 67.50, 67.75. So those are upside targets 1, 2, and 3 on the upside. And the downside targets 68, 66.88, 66.65, 66.38. All right, those are our levels. So quarter one, 6:30 to 8:30 VWAP test range build, 66.88, 67.05. We see that range being built and established right now. No true direction yet. Quarter two, 8:30 to 10:30, possible breakout to 67.33. So that would be when we see our 67.33 come into play, possibly quarter three, 10:30 to 1:30 compression range. 10:30 to 1:30, that would be like the compression condor. I'm not sure if I'll make that play today or not, but I'll definitely do the gamma pin quarter four, 1:30 to 12 to 1 gamma pin. So looks like my time, ChatGPT Grace didn't update my Pacific Standard Time, and I've got some discrepancies in my time. So, you just looking at it objectively, she made a mistake on my time. However, I already know it's 10:30 to 11, and then 10:30 to 11:30. Sorry. Wait, no, that's not right. The quarter four is 12 to 1. And we'll just say quarter three is 10:30 to 12. Okay. And looking at the situation, I'm just going to go into some probabilities for my trade placement. I'm going to go ahead and start looking at when the VWAP gets tested. I'm looking at making an entry at the money, just beneath the VWAP. So that would be my put side. So my puts, my put credit spread, I'm going to start referring to it as such. So my PCS, put credit spread, would be right below the VWAP, or As soon as price like tests the VWAP, I would enter in there. Looking at the 5-minute chart, hasn't touched it yet. It's got to touch it and close to 2 5-minute candles above it before I enter a play. Otherwise, my plan B would be for price to get to 67.33 and then assess whether or not I would enter a play at that point. So I'm just looking at plan A right now and plan B. So plan A is to do an in the money or at the money put credit spread at the VWAP or right at price as it retests the VWAP. If we get a retest, we should get a retest of the VWAP though, and that will show the true direction that the smart money institutions will be taking price in. So that's what we're waiting for, is confirmation, a retest and confirmation. As we are waiting for that to develop, I am analyzing the put credit spread just at or below the VWAP or right at price as it does its retest. And plan A is the confirmation of the retest that it gets accepted. So that's plan A. So I'm working on that. I'll let you know when I progress to plan B. Well, this is one of those particular cases where we may not see a true touch of the VWAP. The reason I say that is price did touch the support level, the first gold bar. I will change the color of the gold bar to a green. So for the type of trade I'm doing today, I need more confirmation than that. I'm changing this guy right here. Oh, didn't change. Well, first, let's delete one. There. Okay, so that is a support level. But I need a retest of the VWAP. So not doing anything until price gets to 67.33 or it comes back to the VWAP at 6,700 or wherever the VWAP moves, it's angled up, so it's gonna be higher at the retest. So that's what I'm waiting for. Just gonna take a look at where that wick is on that red candle. It's at about 67.23. It wicked up at 67.23-ish, and the true liquidity target's at 67.33. Then 67.50, 67.75. As high as 68.11. But again, keeping that in mind, today's strategy is a scalp in the money, at the money, exit 30%, automated close, automated close. So when price comes, it automatically closes. No bouncing around. We can avoid that, and we can avoid the psychological psychology of greed, spirit of greed. It's rebuked, and we just get our profits automatically. We automate it. We're going automation. Standing down, waiting for the retest. Not only does it confirm the bias and the direction and the commitment of the smart money institutions, however, we also get higher premium on the retest as well. We get more credit for the trade. The risk reward is greater, and we tend to get a greater return, which means higher profits. So we're just going to wait and not debate. So if you're on Thinkorswim, hopefully, well, you need two charts, right? You need one for the chart and then the other for your trade. That's the way I like to operate. I execute my trades on my phone. It's easier to do that. However, a laptop gives me more data on the trade. But, you know, the data can be noisy. So on the phone, it's very simple to execute a trade. Like I'm saying, I know some of us are on Thinkorswim, so we want to have the SPX up. We want to go to the options chain, and we want to make sure we have today's strike date, the expiration date. That would be the date you select, the date that the contracts expire on. So that would be today, March 16th, 2026. That would be a 0 day to expiration trade, 0 DTE for short. And you would want to start looking at the calls and puts and comparing them to the price you see. With the paper trade, we're going to go in the money, which means that if price is 67.18, you want to place your trade at 67.18. We are on the call side at the moment. It could change once the VWAP is retested, which it will be. Cannot predict when it will be retested, but it will. It is the magnet line, and price is going to be attracted back to the VWAP. Now, it could hit this green line that I've set up, which is a support line at this point. So it could touch that and bounce back up also. The line that I drew is at 67.05, and by the time we get the retest, the VWAP line could, in fact, have gone up to 67.05, and then we see the resistance line there. Talking about the green line on my chart. keynote in the previous session, price got to 67.05 and rejected. You see that? The institution stepped in, shot it up, shot price back up to 67.33, but then sold off into 67.05 and then went even lower. Finished at 66.30. So that's from Friday session. So just keeping that in mind, that's what happened on Friday when price was at 67.05. Looking at previous day's performance. Just things to keep in mind as we strategize and analyze. So what does that mean, Coach? Well, that means that, price could go below 67.05. They could sell off again into 67.05. Well, how do we know they're not going to do that? Well, we're waiting for a retest at the VWAP line. That's what determines whether or not they're going to do that or not. Well, how do I know that? Well, that's what happens at the VWAP line is test and retest pricing. Again, it goes back to supply and demand. It goes back to selling above the VWAP line is selling at a profit, and buying below the VWAP line is buying at a discount. So that's what the VWAP line is used to determine. And looks like we're getting, strong push up to 67.33. But again, we've got a demand zone at 66.40 through 66.65. Oh, wait, I'm heading in the wrong direction. My bad. Previous day high, 67.33. 67.33. Upside target 67.75. So we could see some of that business. Again, we're holding on for the A+ setup. So the A+ setup is a clean retest of the VWAP. That's plan A. So I'm looking at higher time frames, and on the higher time frames, prices at the VWAP line. So I'm looking at the 15-minute and the 30-minute prices on the VWAP line right now. So we are getting a test. However, we want the 5-minute to confirm what is seen on the 15 and the 30. Change the orientation of my screen. So you see what I'm saying? VWAP is moving up already. It's 67.03 on the 5-minute. Another one of my charts says it's at 67.04. So we can go with that though. There's a different, the data gets transferred at different rates, but it's pretty accurate in the sense of being able to determine our strategy. Actually like the vertical. I feel like I see more.
Q2 continuation or reversal decision trap. Midday chop zone. Range behavior likely. Capital protection phase. Smart money psychology. Let them think prices stably accumulate quietly.
Okay, here comes our retest. All right, notice RSI is bending down. Ever since Barry mentioned it, I am using the TTM squeeze. I like it. It shows, I do believe it shows when explosive moves are about to happen to the upside or downside. And it's another indicator of where the target is going to be hit. So here we go. We're getting some action at the VWAP line now that we can use. We can use this. So, got my plan A, which is acceptance of the VWAP, enter at the money, the put credit spread, and then place my calls above the liquidity target at the top side. But I did not talk much about if VWAP gets rejected. So if VWAP gets rejected, I put my call credit spread above the VWAP, right? So well, not in this particular case. I'm doing an at the money trade. I could do an in the money trade too and just let it run to the lower liquidity. A put credit spread in the money right around the VWAP would be for the upper liquidity target. So I'm just talking about one half of the Iron Condor right now. The Iron Condor, again, consists of a call credit spread and a put credit spread. So I would place my one or the other at the money and then extend the side that the liquidity target is on further away from the money. That'll make sense in a moment if you don't get it. Once I enter the trade and break down the play-by-play, then you'll start to understand. I'm not saying you'll get it at first exposure. You're not supposed to. It's repetition. It's repetition. But one thing that you should be getting by now is the VWAP is being retested. So that concept, if you look at the screen, my screen, your screen, wherever you have the VWAP, where you can visualize the test that's going on there, you got a big red 5-minute candle like busting through it right now. That's not confirmation that it's been rejected, but I mean, we are seeing a test. This is a test. So again, if I was looking at my 1 minute time frame, which I am, it's being rejected on the 1 minute, but that's not what we base our entry on. We base our entry on two 5-minute closes. I'm gonna go ahead and try to make it bigger, seeing that this is what we're focused on. So that is a bearish engulfing red candle. So that was a strong sell into the VWAP. However, not strong enough, because now we're seeing some buying action at the VWAP. And that's not a small green candle as of right now. It's still forming, but it's still sizable. And right now the average true range is on the 5-minute frame, we'll call it 12.5. So it's going to take up 12.5 points potentially. So I'm already able to calculate and conclude that my entry again is going to be somewhere around, well, we're at the psychological number of 6701. 6700 is the actual psychological number. The liquidity is actually at 6705 through 6710. That would be the upper base of the VWAP. I'm realizing my smart money roadmap did not give me the supply zone. I have a demand zone, but it did not denote where the demand zone is, which is okay for now. I'll update it shortly. We're in Q2 right now, decision and expansion. Well, yeah, headed out of Q1 anyway. Liquidity sweeps, fake outs, overnight trap testing. So looks like we are seeing our first sign of rejection at the VWAP line, which takes me to plan B. It's still an A plus setup. It's just that the plan has changed for the A plus setup. So now we're looking at the call credit spread side, right? So what I am considering is placing my call credit spread, which is the 1/2 of the condor. I'm going to stress that. That's 1/2 of the condor, which is an actual play in itself. You're simply saying that you expect the direction of price to go down. Call credit spread. Price goes down. Okay, so what I am looking at is the downside targets. Okay, this is where 30% comes into play because it's not going to accelerate as quickly. You see the ATR is starting to go down. So average true range is going down. So it's going to take some time to get to the downside target. So I'm looking at the first support level. It's at 6665, 6665. You got the demand zone at 6640 through 6665. And then you've got previous days liquidity at 6638. Okay, so with that being said, I am now going to take a look because this does look like a rejection of the VWAP. The bias of the market is changing to a bear bias, which is down. Okay, so I am looking at current price 6696. And so if I buy the 6695, that is in the money. So I would sell the 6695 and buy the 6700. That would be in the money. Then I would go to, I'm going to write that down so I don't get too lost. That is my call credit spread. 6695, 6700. I go to my put side. taking a look at the deltas over there. 66.65 is the first support level. The true demand is at 66.40, 66.65. So definitely want to go below that. That first demand zone, 66.40. Seeing that this is a scalp, and that's where price is going to go. I'm going to go to the lower zone part. Well, no, I'll go lower than that. I'll go 35, 66.35. And so I'm going to sell the 66.35 put, and I'm going to buy the 66.30 put. So that's my put credit spread. So now I've got my position. It's not quite the credit I was looking for. It's not bad though. I'm going to look at my 1 minute and make sure I close my contract while price is going up back towards the VWAP. Should it get rejected this time? I'm looking at the 1 minute chart right now, timing my entry. So when I see the forming of a red candle, I am going to submit, and I'm playing for price and the bias to be bearish, because VWAP has been rejected. Looks like we'll get another retest, which is good because the premium expands in my favor. So the closer that green candle gets to the VWAP, the more credit I'll receive, because price is approaching my call credit spread. And I'm seeing the red candle and I'm submitting. So I submitted my trade and it got filled instantly. Okay, so now I'm going to take a look at my trade, and I am going to set my auto close. My position is established. I have the 6695 short, 6700 long. I've got the 6635. Whoa. Yeah, 6635 long on the put. 6630 on the long. Sorry. Let me go over that again. That was not good. 6695 short call, 6700 long call, 6635 short put, 6630 long put. Yeah, that's good news. So that's good. That's my scalp. That's my entry. I am now working on the auto close, right? There ain't no messing around here. We're working on the auto close. Not even playing today. This is how it's going to be all week. Sniper mode. Quick scalps. calculating my exit. It's 30% of the credit I received. I'm trying to see what I bought it for. This new platform is kind of confusing. Working it out though. Okay, so got that figured out. So I sold each contract for $3, and I'm going to buy them back for $2.10, and that would be my 30% scalp. Took me a while to. I knew that's what I wanted to do, but getting to the right fields and right section of the app is tricky. But I'm there. I'm setting my price. For 210, just confirming debit. So debit for 210. Doing a preview. Just need some confirmation that I've set it up right. Not that I trust ChatGPT 100%, but just double checking my work. It was obvious time, not in a hurry, no rushing through the process, double checking because it's new, being cautious. Okay, so that's set. It's cooking. Little update on the action right now is we're seeing some VWAP consolidation. So prices consolidating around the VWAP line, that 6,700, where the orders are. Did not check the open interest this morning. That needs to be a daily habit. But I will do that right now just to get a feel on what we can expect. Looks like 66.75. Although this doesn't go down very deep. So the deepest 60. Actually going to switch charts. Gonna go Thinkorswim on this one. Or maybe not. Yeah, that ain't working. Most amount of contracts is sitting right there at 6,700, which is why we see consolidation there. And then, yeah, there's some contracts at looks like 67.45 too. So we could expect a break in either direction. To the upside would not be good for the scalp. However, VWAP is moving down. Everything's kind of stepping down. Looks like 6,700's being tested. then on the 1 minute, seeing some rejection there. On the 15 minute, getting red candle forming. And on the 5 minute, we're just looking at it just sitting there. So, with that being said, we're in the scalp. Price is set. SPXX. Oh. Got some funny business here. Uh-oh. See, that's an ugly chart. Oh, it's the wrong thing. Oh, how did that happen? Let's go here. There. Okay, so the thing about the trade is okay, there we go. Okay, so on Thinkorswim at the 6650, I'm seeing 3,000 open interest contracts waiting. And then at 6675, I'm seeing 2,000 open interest contracts. 6,700 has the highest number. $6,750's got 4,000. 6,760 has 2,500. So we've got liquidity sitting on both sides. And I'm going to mark off the bottom here, because that is an area of interest. Yeah, that's not what I'm looking for. Looking for this. Just marking all. There we go. There. And I'm going to raise this up a little bit. Got some institution feel right here. Yeah. Okay, there. Yep, this is the part where we can set it and forget it. It's got to do its thing. Let's see, we're in Q2, decision and expansion. Smart money declares direction via displacement candle. 805 to 812 confirmation windows, 855 to 910 strongest move. So we are waiting and debating. waiting, debating, and anticipating. Okay, that's it. We are in the trade and we're just letting it do what it does. A lot of action around the VWAP line today at the 6,700 level. There's a lot of contracts there. We've got liquidity on both sides. Contracts sitting down at 6650, which is within range, and then we've got upper liquidity at 6733, prior day's high. Price has gone there today, 6733. We've got an upper zone at 6772 for resistance, with a third level being at 6811, so that's the upside. All right. So we are still battling it out at the VWAP line, which has moved up to 6703. We got a wick down. Right there, 6785. That's not the liquidity pocket though. I keep saying 67. That's 6685 pocket. But the liquidity is the red line. Okay, so here's the update. All charts are indicating a dance around the VWAP line. Price is slightly above the long call side strike. Not too concerning right now. Seeing that. Well, the concern is that 6,700. That's that psychological round number that I am not too keen about. The bias has not actually flipped. We're still seeing like the VWAP dance line. So the bias is, I would say, neutral, bullish, bull neutral. It's not a strong bull bias. I do have the new support line at 6712. However, we can see that there's liquidity sitting at the high of 6733. It wicked up when it got there, so price was not accepted. And there is liquidity at 6685, which will probably most likely be my exit, 33% or not. It would still be a profit and a good time to exit the trade. Well, depending on the bias, to tell you the truth, I was expecting originally for the downside target to be 66, 65, 66, 40 zone, which if bias flips bearish and does a claim of the bearish bias, then that would potentially be the target, which is the demand zone. However, at 6685, that is testing ground also, because that is I'm looking at the origin of impulse there, that big green candle that took place at the beginning, because that's relative in today's market structure. I'm looking at what's the deal at 6685. Lower VWAP band is around there. Again, we're seeing a sell-off into the VWAP. Which isn't relative until we see the VWAP just outright get rejected. Relative strength index is dipping down. So that's a good indicator that we're headed towards distribution. Not seeing much on the TTM, no red dots. So it won't be like a explosive move. However, this is the move that I was expecting, or at least going in the direction of the play. Okay, so notice we have most everything sloping down. That's a good indicator that price could be going down soon and getting into our zone. So if you're in this trade and you're nervous, this is close to your exit. But if you've stayed in it this long, you can see what's happening. We're getting like big red candles headed in the direction of the thesis. So that's where we're at. Got the auto close set for 30%. Thing to note, that price could reverse at 66.85. Just saying that when it gets to that level, it could reverse at 66.85. However, that green institutional candle, the origin of impulse, I'm looking at that. And I'm also looking at to see what has happened previously when price got to this zone, and it didn't reject previously until, well, there it is, 66.85. But it went below there. $66.85 has been an epicenter of acceptance and rejection. So I know the probability of going to the demand zone is 66.40 to 66.65. So that is ideally where my 30% triggers. I may close before that just because. Just because I don't want to lose any trades this week. So err on the side of caution. Yeah. So that is my analysis at the moment. Let's get a time check. Quarter two comes to a close at 9:30. We are in that zone, quarter two, where we see a declaration of direction via displacement candle. The displacement candle could be the big bearish red candle sitting on the VWAP. Mind you, is sitting on the VWAP. Looks like this next candle is going to close a miniature. Oh, it's turning into a pin bar because the sellers are pushing it down. So price is being pushed down right now by the sellers, and the bar just turned red So the sellers are showing up. So we can conclude once again that there's a bear bias. The bear bias has been reclaimed. Just a note, coaching note. Moving forward, we're going to wait for a retest of the VWAP, even with bearish confirmation. Ordinarily, a 5-minute candle below the VWAP is sufficient. This morning, we got two, well, there's a pin bar there, but we got two confirmations that it was a bearish bias, but then you can see the institution footprint pushed it back to the VWAP, and then a few candles to reclaim it. But, well, not really. I mean, well, we do have two 5-minute green candles reclaiming the VWAP. It made it it did go to the intended target, which was 67.10. So the smart money roadmap identified 67, the upper base of the VWAP was 67.05 to 67.10 with a major liquidity at 6,700, which has been absorbed for the most part. And then that's when, we saw it reach to 67.20, which is an extension of the 67.10 zone. and then it retreated back to the VWAP, and now the VWAP has been rejected. However, the A plus setup, I would say, would be the retest of the VWAP. However, I mean, that could have been a trap too. So we made a good play considering, VWAP has been rejected. So the original bias, it was for all intents and purposes, it turned out to be the correct bias for now. So we're looking at some institutional fill-in to not leave gaps, but the bias is still bearish until the VWAP is reclaimed. And for all intents and purposes, well, we're getting a strong impulse right now. The RSI is 51. But the range is 6, we'll call it 7, the average true range. So this candle will expand no more than 7 points, which would not be enough in 5 minutes to reclaim the VWAP. It would take, at least 2 strong candles, and with the RSI and the volume being what it is right now, that probability is not high. I'll say that much. I'm looking at all time frames, confirmed that price is definitely below the VWAP. All of them except the 30-minute. The 30-minute time frame is showing that prices on the VWAP, but below the VWAP number is sitting at 6704. So the longer it stays below 6,700, the better, because the VWAP line will move down, and I would love to see the VWAP line below 6,695. Okay, so I am gonna take a break from the chart watching as we get set to enter quarter number 3, accumulation distribution phase, 9:30 to 11 a.m. Base building absorption energy bills for next move. Key windows 10 to 12, absorption 10:25 to 10:40 setup. So we're closing out quarter 2. Decision looks like the decision is to go bear bias as of this moment. We're starting to see lower highs and higher lows forming. Looking at the true range of the candles are getting smaller. We'll call it 6. Average true range is about 6 points of a candle. RSI is starting to slope down 47. And don't see any major moves on the TTM squeeze. So we are looking at a slow grind towards the first, the level is 6685 that I've marked off. and lower liquidity at the demand zone 66.40 to 66.65. That's what we're looking at. I'm just going to take a look at my true risk center. That's what refers to the center of my condor. So I am going to get a read on that real quick before I take a break. That's the true risk center. So when you're talking to your AI, you ask, what is my true risk center? So my true risk center is 66.65. So that means that's the maximum profit zone for me. 66.65. True risk center. So there was that wick down to 66.85. That's the one that concerns me because that is I identified a zone where price could reverse. Don't want that. I'm at 15% green right now, and I'm holding because I do stand to believe that we'll get to the true demand zone at 66.40, 66.65. But I am watching closely right now. But we do have a formation of lower lows and lower highs. RSI is bent down. We've got the 20 EMA on top of the 9 EMA. We got big red candles. So that is a bullish red candle. I've been wanting to share. I said bullish, I meant bearish. Oh, my bad. There is a Japanese trader, historical 1600s. And believe it or not, the stock market existed. Okay, so it broke the support level I was concerned about. It's headed strong in my direction. I'm at 23%, so I should be getting an auto close pretty soon. Bullish engulfing. Bearish engulfing. Sellers have seized control. Emotional based interpretation. And I love this. When one day swallows another, the market's heart has changed. So I think that like the bearish engulfing candle is reversals, continuations, confirming shifts in momentum. That's what we're seeing right now. So that's awesome. I'm at 22% profit well, it's bouncing back and forth like it does. So I see 20. I should be hitting my auto close pretty soon, as long as price continues to head towards 66.65. That's great. That's a thank you, Jesus, a hallelujah. Sincerely, truly. It is important for price to be rejected right here at the 66.85 level. And then the probability that it'll continue to march towards the expected demand zone, 66.65, 66.40 is high probability. So we're looking for a 5-minute close below 66.85. On the 1-minute chart, it's all the way down to 66.82. "15-minute chart, I mean, the candle is huge and red. And on the 5-minute chart, looks like we're gonna get a close, a red close. If that happens, then it's definitely money. Because the next support level isn't until 66.65. So price should just fall. So we see that doji. That little cross is called a doji.
Q3 exhaustion zone. Late session window. Manage positions carefully. No revenge trades. Smart money psychology. Now that we have loaded, move quickly before retail reacts.
It says, I'll give you a little bit on the doji. The doji is indecision, balance, and the pause before the move. meaning the market uncertainty, balance between buyers and sellers, a pause before the next impulse. There's two interpretations. Doji after a strong trend can signal potential reversal, wait for next candle confirmation. But in this particular context, the doji inside a trend signals continuation, a healthy pause, opportunity to join. The Japanese trader Homa, the market takes a breath before speaking again. I love this guy. So again, time spent at the 66.87 level or below is good. Well, we're seeing some institution fill in here. RSI is still relatively low. It is bending up 42. No, I said I was going to take a break, but I want to see what happens at 66.85. So you can, if you're looking at my chart, you can see I've got that marked off as a red line, insinuating that could have been a level where we saw support and a bounce and a retest. However, for all intents and purposes, the other time frames, the 1 minute shows that price is at 684 and a red candle's forming. On the 15-minute time frame, there's a big red candle beneath the VWAP, and price is 66.83. So, price is 66.83. All right. Well, it's pitulating between 83 and 65. And the next close, it's about a 6.5 point spread here, range, as we'll say. All right, it closed below. That pin bar right there closed below 66.85. And this candle right here, 42 RSI. At the moment, it doesn't have much juice behind it. But we know how that goes. However, in this case, I'm at 18%. Got the auto close for 30. So I'm feeling that the test is behind And well, that's how I'm feeling, but what does the market say? The market doesn't care how we feel. Looking at 66.85. I don't have any. Do I have anything on my roadmap? Lower VWAP 66.88. So we could see a chop right here. Could see a little chop right here. But that lower supply zone is so close. It's so close. That doesn't mean anything. But what it does mean is the longer it stays at this zone right here, the more theta will accelerate the value of the trade, or decay the value, because we want the trade to actually expire worthless. So the longer price stays in this zone, the greater the theta acceleration and the high probability that I'll get my 30%. And the VWAP will also be curling down too. So again, the 9 EMA, the 20 EMA are both curling down. The red is still over the blue, which means we are bearish. RSI is low. True range is 6.5. That's not very high. All of the time frames indicate we're still bearish, and there are no just taking a look, just taking a lookie.